Well, good evening, everyone. I'm hoping you all can hear me. If somebody can put in the chat room that you can hear me, that would be great, and I will get underway. Perfect. Thank you, guys. Well, it's been quite a ride to get here, let me tell you. This has been one of those incredible adventures for me, and I hope that I'm so excited to be sharing all of this with you. I'd like to talk to you a little bit tonight. Um, uh-oh, so we have one person who says they can't hear it. Well, I'm going to pause just 1 second. I see more people are flying in here, so I'm just going to pause and restart for a second. Can somebody else put into the chat that they can hear me? Okay, that's excellent. Thank you, guys. Okay, let's get started here. So it's been a hell of a journey, and I'm so glad that everybody here is joining me on this because this is a really exciting time to be involved in the crypto space. So tonight I'm going to talk to you about Ethereum. But before I do, I'd really like to just take a minute and take a step back and talk a little bit about how we got here to the present day. And I'm going to do that in the form of a story. So bear with me for the next 10 minutes while I tell you a little bit about the story of crypto and currencies, starting with currencies. Back in the year 1890, off of the Canary Islands in the federal states of Micronesia, there was a small island called the island of Yap, which had a small indigenous population on it. The population had fairly sophisticated technology for being a isolated tribe. They had writing, they had wheels, they had building, they had agriculture. These are really important basic building technologies for for any civilization. So one of the things that they figured out that they needed was they needed a currency in order to help them do their tradings and their transactions. I've got other people saying that they can't hear me. I think you might need to dial in. I'm just going to keep going here because we're recording. They realized that they needed a currency. And what I'm making a distinction between a currency and money is something that is tangible, a physical good that has intrinsic value. For example, an example of money is a gold coin. Why? Because gold has intrinsic value. Now, gold has real problems because you can't, you can't transmit it around, you can't break it up, it's not fungible, you can't transmit it everywhere over the world. But this money is in contrast to currency. And currency does not necessarily have intrinsic value. Its value is derived from the fact that people give it wealth. And so the island of Yap is really a story about why people give wealth to things. These guys, they realized that they wanted a currency. And so what they did was they didn't exactly have printing press technology or some of the other important technologies for doing, currencies, but they realized that the currency needed to be uncounterfeitable. So what they did was they mined these gigantic stones. They went into the stone quarries and they mined out these gigantic stones called rye stones. And what they would do is they'd take these 10-foot, 15-foot, 20-foot stones. They'd mine them out of the stone, and they would roll them out into the field or into the jungle or into wherever it was that they were wanting to put the stone, and then they would host a party for all of the village to attend, and they would feed everyone and spend no expense on drink and food and giving the village this great party to celebrate the birth of this new stone coin. And in this way, the stone coin entered the circulation of the currency, because everybody knew that those who had done the work of mining the stone coin now owned the currency. And so When it came time to actually transact with this currency, when it came time to buy a house or make an otherwise very large purchase, and they wanted to trade the value of the currency for the item that was being traded, the house or the cow or whatever it was, what they would do is they would announce loudly for all of the village to hear that this transaction was taking place. And the village would maintain this ledger of account. They would know that Jim Bob had the stone on top of the hill, and Courtney had the stone down by the beach, and Trevor had the stone over in the jungle. Okay? So if somebody tried to transact with a stone that they didn't actually own, the village would speak up and say, no, that's not your stone to transact with. That's not how this works. You're not allowed to, spend a stone that you don't own. So the village maintained their ledger of account through the consensus of the village. And this is, in the same way, how our currency works too. Except instead of stone coins, what we're really talking about is we're talking about potentially US dollars, which are being issued by a government. And instead of the village keeping the consensus of who owns the currency, we're usually talking about banks as sort of the basis. The banks are responsible for keeping the ledgers of account, and they're responsible for keeping the consensus of those ledgers of account, which is to say that when money goes down in one account, when money goes up in one account, it goes down an equal amount in another account. And in this way, the consensus of the ledger of account is kept. This is our money. This is our money. This is our currency. This is how we actually deal with value today in reality. And the reason that I say this is because when you get your paycheck, you don't get physical goods delivered to your door. Value in an account goes down in a bank in one account, and that same value goes up in your account. And this is how we maintain our currency. Now, the people of the island of Yap fundamentally understood this. So when they needed to transact this, the stone didn't need to move. It was just the stone at the beach, and this was how we referred to it. And when we wanted to transact it, it remained the stone at the beach, and then the ledger of account of who owned the stone at the beach was modified via the consensus of the village. Now, there came a point where the people of the island of Yap really, really got into this, and they wanted to make more currency, and they wanted to make the currency worth more. And so they realized that part of the reason that the currency had legitimacy was because people were getting in there and saying, yes, it has legitimacy. And part of that legitimacy was recognized through their efforts in mining and creating the stone and bringing it out into there. So they devised a plan to make gigantic rafts, which they would sail out tens of miles onto the ocean. And they would go out to distant islands, and they would mine out gigantic stone coins out of the quarries in these month-long expeditions. And then when they would sail these coins back on the raft. Well, one time when they were sailing an especially large stone back on the raft, a storm hit, and the stone was lost. It was set free in order to save the crew and the raft. Now, of course, the stone immediately sunk to the bottom of the ocean. And if we were talking about our chips and we were going to Vegas and our chips were sunk at the bottom of the ocean, we wouldn't be playing any blackjack tonight. That would be that. But this really wasn't a problem for the people of the island of Yap. You see, this just became like the stone that was in the jungle, or the stone on top of the hill, or the stone that looks like a penis, but we don't talk about that because Jim gets a little upset when we do. This became the stone at the bottom of the ocean. You see, it didn't actually matter what the physical location of the stone was. What mattered was they had done the work, which they had done, and then this was sufficient for them to claim ownership of the stone. You see, Bitcoin is like rye stones. When you take ownership of a Bitcoin, you don't actually take physical possession of anything. A ledger of account goes down on one. A number on a ledger of account goes down on one account, and it goes up on another account, your account. And this is how we maintain this consensus, not through loudly and proudly announcing it for all of the village to agree upon, or how we more recently did it by keeping it in a centralized ledger and trusting that the bank will do it for us. Instead, we distribute the ledger and we maintain consensus through the laws of physics and the laws of math. And this allows us to basically prop up new markets of value, new ledgers of account, new currencies as often as we want, freed from the government having to do it for us. Okay? So this is sort of the story of Bitcoin in its entirety and how we got here through stone rocks via the bank onto distributed ledgers. And holy crap, hold on just one second. So sorry about that. I had a washing machine go crazy on me. Sorry, I'm back. What I was saying was that this is the story of Bitcoin. So we got here through these ledgers of account via the banks through distributing our ledgers of account. Now, let's extend this metaphor one step further. When at the end of the 20th century, in the late 1890s, the German government conquered the island of Yap, and immediately they demanded of the people of the island of Yap that they start building roads right away, because the dirt roads and the gravel roads were very ineffective for their military jeeps, and it just wasn't working out for them. So they wanted roads, and they demanded that the people of the island of Yap build the roads for them. And the people of the island of Yap were like, yeah, right. I mean, they had never really dealt with, any sort of outside influence dealing with them before. It was very new to them that this idea that they had to do something. So 6 months went by, a year went by, 2-3 years went by, and no roads were built. And the Germans became increasingly upset about their non-compliance. And so upset they became after 3 years that they slaughtered the people of the island of Yap, is probably what you're expecting me to say. It's actually not what happened at all. Instead, they devised a solution that is incredibly peaceful and actually quite brilliant. What they did was they took buckets of red paint and they went and painted these gigantic red X's on all of the stones that they could find. And what they did is they declared their currency seized, property of the German government. Now, the people of the island of Yap had never encountered this before. They had never encountered this idea that this was, that this could be done, that their currency could be taken from them. So this was completely new to them. They were shocked. They were aghast. Their currency had suddenly been seized, and now they didn't have the power of its spending anymore. And so, within 6 months, in very short order, almost right away, the people of the island of Yap started building roads. And within 6 months, those roads got built. And then the German government came back to inspect the roads. And having seen that the roads were built, they took buckets of solvent and they removed the red X's from the stones. And they returned the currency of the island of Yap to the people of the island of Yap. This is very much a metaphor for our currency. Because we allow our government to have control over our ledgers of account, and we value that ledger of account, the government has control over our money. It has control over our banks. It has the ability to seize our funds and do with it basically as they please. The opportunity with distributed ledgers of account is to remove that government control. Take control back of our ledgers of account. Don't centralize them around these banks. Instead, we can own them and just prop up markets without governments, because governments, as it turns out, really aren't very good at this. If you're not losing faith in the U.S. dollar, you're probably not paying enough attention. If you look at the debt ceiling, if you look at the model by which new currency is minted, if you look at the model by which the 99% continue to enrich the 1% through fractional reserve banking and Wall Street and all of these problems, What I'm really talking about is I'm really talking about wealth redistribution. I'm talking about creating a new 1%, a 1% that is based on wealth of assets rather than wealth of traditional money, traditional currencies. Okay, so those who participate in that opportunity are going to be ahead of the game. So for a long time, Bitcoin was the new kid on the block, and then we got a whole bunch of altcoins. Okay, and altcoins are just copycat technologies. They take the blockchain and they just start a new blockchain, and now we've got a new distributed ledger of account, and we just hope that people put more money into it. But what Ethereum and Vitalik figured out was that there's actually more opportunities to these things. The opportunity with Ethereum that he figured out is that you can put programmatic rules into the blockchain. It doesn't just have to be a ledger of account in which the rules are that the accounts go up in one and go down in one account and go up in another. We can apply additional rules. In fact, we can make our blockchains programmatic, and we can prop up a blockchain and then create a new set of rules on that blockchain and issue tokens within that blockchain and have those tokens follow the rules of our program that's running on the blockchain. This is called a smart contract. And the reason that smart contracts are cool is because what they do is they allow us to create businesses. Now, normally the way a business works is people run businesses. You have people and they create a product or they create a service and they maintain that product or they maintain that service. Then people pay money for that service. And this creates effectively what is known colloquially as a market. The way Ethereum smart contracts work is you can program the rules of how the business needs to operate into the smart contract and then launch the business by launching the smart contract. The problem is that businesses need money in order to run. They need currency, effectively. They need values in which they can affect change within the real world. So the way that works is that they're able to issue tokens and then ask people to buy those tokens in exchange for a different store of value, like Ethereum or Bitcoin or dollars. Okay, and what this does is this gives the token its initial value. It creates the initial market to say, hey, this token has value, and we should go ahead and treat it as if it has value. How much does it have? Well, we've decided that via the ICO. And then if the market doesn't like that value, if it doesn't like that price, well, then the price will come down afterwards once it reaches the market. Or maybe they think the price was undervalued, and then it goes up after the ICO launch. Either way, ICOs are not a get-rich-quick scheme. You do not buy an ICO and then on day one hope to sell it. I mean, you can, maybe if you're planning your ICO right, okay? But ultimately, ICOs are a bigger opportunity, okay? The opportunity here is to invest in a new business model, a business model that doesn't require executives anymore, because the operation of the entire business happens on the blockchain. So you can take ownership of that business by buying into that market and holding the tokens. Let's use an example. I happen to have one I really like. It's called 10x. What 10x does is it creates tokens on the blockchain, and what they're doing is they're working with Visa to become a Visa card issuer. They're going to create 16 digits and print it on a plastic card. They're going to give those cards to people. And then they're going to allow people to deposit Ethereum in their account. And then when you go to swipe your credit card at a POS terminal, at a merchant, they'll deduct that Ethereum from your account. Now, this starts to look a little bit like the traditional model. What's interesting here, though, is that when you do this using, for instance, your bank card, there's a fee associated with it. And we all know this because when we go to swipe our cards, the whole thing is that the fee, there's a $10 minimum transaction. And the reason for that $10 minimum transaction is that fee has to get paid for. And if they aren't making $10 and they're paying $2.50 out, well, they're not making any money at all, right? They're making whatever the difference is on that. So it's important that they figure out how to make their money, and they do that in the form of a minimum transaction. Now that fee, that $2.50 for every time that card gets swiped to the POS terminal, that fee that transaction can go through as many as 10 intermediaries every single time before the money comes out of your bank account. And every single one of those intermediaries is basically taking a cut of that fee. In 10x is the direct issuer. They're the ones who are issuing the cards. So the request for the clearing goes directly to them, along with the merchant and the fee that the merchant pays. So you have a request for a deduction from some account, but you also have a fee that's being paid out in order to make that happen. And the way 10x works is that you hold 10x tokens, because what we did is we invested in the creation of this business, which will create these cards and then do the clearing on those cards using accounts in Ethereum. And then the business will pay 10x holders Ethereum from those fees. Okay? What I'm talking about is I'm talking about being Visa. I'm talking about being an intermediary. I'm talking about collecting those fees. Well, I want to just sit back and make passive income off of fees from people swiping Visa cards. I think that's brilliant, right? I want to be Visa. I want to take ownership of that model and be a part of investing in that. And the opportunity here is that in the old investment technologies, you had to go through the SEC. You had to create something called a security. You had to create stock, a stock, and then offer it through an IPO. And you had to be, and here's the critical part, an accredited investor. An accredited investor, by definition, is the 1%. Okay, so what we did is we created a system that enriches the 1% because only the 1% can get enriched. That's it. That's what we did. And what this does is this creates an opportunity to create new markets where anybody can get in. Anyone can get in on the ground floor with $100. Right now, you can go buy $100 worth of 10x tokens, or Direct Developer Fund, or Power Ledger, or Tron, or any other one of these, and get involved in this new form of business. Okay, so this is sort of bringing us up to where we are today. Where we are today is Wall Street has gone way on this tear, and the Dow Jones is way too high. And as a result, crypto has been also on a tear. And what I think is going to happen is that once the stock market starts to come back down, because it is in a bubble and we are having a weird political situation. I don't want to get political on you. We are having a weird political situation. Once I think that the stock market starts to come down, people are going to look for a place to put their money. And when they do, they're going to look for not just cryptocurrency assets. They're going to look for businesses. Why? Because this is a traditional mindset. This is a traditional model. And they also have the potential to do 10,000% in a year or something, right? So people, traditional investors in the stock market are going to start taking their money out of the stock market, and they're going to start putting it into the crypto market, into the ICO market. And once that truly happens in earnest, once that momentum of people taking money out of the stock market and putting it into the ICO market and the crypto market, once that momentum takes over, I don't think that the trend can ever reverse itself. I don't think we can ever go back to enriching the 1% on the backs of the 99%. I think that this landslide will begin, and what we are looking at is we're looking at an arms race. Who can get to market first with the cool products first? Because those who do are going to start solving problems, and those markets are going to take off really fast. And as soon as those markets take off really fast, you're going to get Me Too's. You're going to get everybody coming into the space trying to make a buck. Okay? It's a gold rush. And we are in the wild, wild west right now. There's no regulation. There's no way that there's no way to stop this effectively. There's no way to regulate it. There's no way to slow it down. It's only accelerating, and it's only going to continue to accelerate. So this brings us up to the present day. This is where we're at today with our ICO market, which is taking off, with our asset market, which is taking off, with our cryptocurrencies, which are taking off, okay? And so Ethereum is the underlying blockchain that powers all of these new businesses. It and other smart contract chains like it, like Neo, and I really like Neo too. I'm not just talking about Ethereum. I'm really talking about blockchain smart contracts. But I really like Ethereum because it was first, and there is something to be said for those who are first. Okay, so recently, Ethereum announced a hard date for its upcoming fork, and I'll talk a little bit about forks in just one second here. Let me dive into Ethereum and forking. Back One of the first initial ICOs that ever happened was called the DAO, and this was supposed to be a venture capital fund that would allow people to invest and then take ownership of the DAO, and through voting rights conferred through those shares, um, basically decide where the investment money went and what things got invested into. Now, what happened was that people who wrote this smart contract were basically new, and this whole technology was fairly untested. There was a bug in the smart contract for the DAO. As a result, sometime after something like 150 million, went up to 250 million at one point due to the rise in price of Ether. 250 million, somewhere between 175 million and 250 million of Ether. 70 million of that got stolen by a hacker out of the DAO. Now, this basically caused a huge uproar in the community, and there were two sort of lines of thinking with regards to this. The first line of thinking was the hard line of the blockchain is law, and somebody screwed up, and we invested in something that we knew could go away, and it went away, and that's that. The other side of this thinking was that people should not be punished because humans screwed up. Yes, blockchains are law, but they're created by people, and people choose whether or not how blockchains operate. And so a vote was held by the Ethereum community. Initially, they were going to do a soft fork to try and return the funds to the DAO, which would basically undo the problem. But it ended up being that wasn't possible because that introduces a whole new security risk. And so a hard fork was decided upon, voted for, and a supermajority consensus of the Ethereum population, 89%, agreed to the hard fork. The hard fork was just to make it so the DAO basically had never happened, and sort of or undo that thing, and then pay everybody. It was basically to create a contract so that you could transfer your DAO tokens back into Ether, and this would basically solve the problem. And so Ethereum hard forked, and Poloniex saw an opportunity here because now there were two blockchains. There was the Ethereum Classic, which still had the hacked DAO on it, and the new Ethereum, which had no DAO, the DAO contract that you could get your Ether back out on. And so Poloniex launched some market on the ETC instead of in comparison to the ETH, and the rest is history. We're now coming up on another hard fork, but this is a planned hard fork, and this is not really a controversial one. This hard fork introduces two new features. It's called Metropolis, and it's coming out in September. And one of the things that it does is it introduces the Ethereum abstraction, and this allows you the ability to swap out the consensus protocol within Ethereum and have different types of account security. Basically, what this boils down to is we're switching away from proof of work via GPUs and things like that, and we're going to proof of stake. And what proof of stake means is that Ethereum holders can gain more Ethereum simply by holding and staking Ethereum. So Ethereum, in theory, is about to become more valuable in terms of wanting to own it and having something to pay out. Now, of course, the other side of that is you have a whole set of investors who are already deeply invested in their GPUs, and they can no longer get paid out. So which way the price is going to go when this happens remains anyone's guess. It really is a guess, okay? It could go up, it could go down. We're not going to speculate on that. What I'm going to talk to you also about is that we have zero knowledge proofs, which basically provide anonymous transaction value. This is the same idea as Zcash, and it basically allows you to do coin mixing right there on the blockchain as a fundamental aspect of sending Ethereum itself. So this is good news. This is an example of a coin which has had its developer time after time commit and then deliver on those commitments, just like Bitcoin, right? Um, and as a result, we've got basically an event coming up in September where we think that there is a potential for some price volatility due to speculation in this market. Now, personally, looking at the fundamentals, I think that the fundamentals of Ethereum are strong. I think that, like Bitcoin, it has a long, long way to run in terms of its price. It has a long, long way to go. But looking at the short term, it's not always as easy to see what's going to happen. So let me pull up a chart here. I'm just going to dive into this chart a little bit for just 1 second here. This is a 90-minute chart of Ethereum versus Bitcoin. And what you can see is that we have a number of correlated resistance and support levels in the market that from basically back here at this time, which have been repeated here at this time. Now, we had a big rise recently, way the heck up to 0.15 Bitcoin for 1 Ethereum before it came magnificently crashing back down. Okay, but when it came crashing back down, what had previously been resistance trying to go up and it had trouble getting above that, now became support coming down. It was trying to come down, and it found this line and bounced off of it. And it found this line and bounced off of it. And it found this line a third time, bounced off of it. A fourth time, bounced off of it. It finally tested it a fifth time before crashing back down to this previous support level. The market didn't like this price at all. It pushed it right back up. Okay? And then we came back down, and here we are. We tested this level again. And the minute that we tested this level a second time, the market did exactly the same thing. It pushed it right back up. Okay? According to technical analysis, what that tells us is that this price right here is invalid. This is not a price that the market is willing to sell at any longer. This is where people turn around and they start buying. This price is invalid because they like it too much and it comes up to here every time. Okay? Now, we have a long-term trend. It's a downward trend. That's pretty obvious. And we can see that when we connect the tops of this downward long-term trend, well, this downward trend gets respected over and over and over. And right now, I'm talking about this very moment, we are once again at that trend line. Okay? So what's happening? People, investors, bought up here. Okay? Or sorry, they sold up here. And what we're trying to do is we're trying to get the cheapest price possible. So they're trying to sell it down in order to accumulate down here, and then later they'll push it back up and sell it to profit. Okay, so what's happening is they're trying to get it down, and as soon as they do, the other set of investors come in and say, no, I like this price. I want more ether, more ether, more ether. No, I like this price. I want more ether, more ether, more ether. And you can see the spikes in volume, big, nasty, ugly spikes in volume every single time we try and test this price. Okay, this is where the market comes in and says, nuh-uh, no lower, no way. Okay. Meanwhile, these big, ugly, nasty spikes, with one exception, do have a downward trend, and this is the one exception. And this one exception was where we did a nasty push on down here. Okay, but what is happening is we have downward pressure from above, and it's pushing the price down. Okay, at the same time, we have buying pressure from below coming in and pushing the price up. What we see is that this downward pressure cannot beat this upward pressure at this level. And what's more is it tries and it tries, and every single time it tries, it doesn't try as hard. Okay? It's like, no, I'm going to go ahead and give up and trying to sell you down and go ahead and let you buy it up. Every single time we're going to do that. Okay? So what we have is we have serious amounts of pressure, lots and lots and lots and lots of upward pressure right at this level here. And we have decreasing pressure coming from below. This is what's called a descending wedge. And a descending wedge is always a good bull pattern, because what we're looking at is we're looking at solid support over and over again. These support lines have been confirmed, and they were confirmed back here. So this is a confirmed level in the market. This is the ultimate buy point right here, right here, right here. This line right here forms your perfect buy line. Everything above this, it just isn't as much profit. But everything above here, if Ethereum decides to go down because of the POS change, where could it go to? Well, it could totally go to here, right? No problem. What do you think investors are going to do? They want their ICO money. They want their ICO opportunities. They're going to start buying Ethereum again. Okay? So here's the strategy. What happens if we buy right here and then it comes down to here? And then volume shoots up. Well, fine, we double up. Well, what happens if it comes down to here and volume shoots up even higher? We double up again, right? Why? Because we're going to be profitable right up here. And then when it actually takes off, if this is 4% right here, that's another 4% right there, 8%, 12%, 16%. Okay, let's figure out where those resistance levels might come in on, right? Let's use the horizontal line tool. We'll put one there, and we'll put one there, and we'll put one there. Well, there's your profit targets right there. Okay. How much do you sell here? A third of your position. How much do you sell here? A third of your position. How much do you sell here? A third of your position. What if it only goes here and then it comes back down here? Well, you're still profitable. Just sell your position, just at less profit, right? Because you were profitable. You were bought in back down here. Then we had all this motion to make you profitable in. Now you're just taking money. You're just taking money. Just taking money. Don't be greedy, right? When you see this happen, when you see this take off, slowly sell out your position. Start taking your profits, And the minute it starts to come back down, take those profits. Wait for it to come back down. Wait for it to hit this line. Wait for volume to spike, and then buy back in a little bit. Why? Because what happens if it comes back down to here? You're going to buy a little bit more again, right? You're going to double up on your position. Then what happens if it comes back down to here? You're going to double up on your position. Why? Because this is going to be profitable again for you. You just do this over and over and over again, all day long, all week long, all month long, and you'll be profitable, okay? So this is the strategy that I endorse, and I'm showing you on the Ethereum chart because I really like Ethereum, and I really like the fundamentals of Ethereum, and I really like the way that this particular trade is setting up with this descending wedge and this absolutely confirmed four to here. It was resistance when we were going up. Here, it was support when we were coming down. This price line is confirmed. We can believe in this price line because we believe that the market really will turn it around if it comes down at this price line, okay? So this is our buy signal right here. Big, big, big buy. We're looking for this one because this is something that we can really, triple or quadruple up our position on if we bought in here, okay? Now, let's say that you are new to this and you saw this and you were here and you bought some, or you saw this and you were here and you bought some, and you've been a bag holder this whole time, okay? Well, it's the perfect time to double up your position. Why? Because if you double up your position, you'll be here in the market, this green line right here, okay? So where do you have to get to? Well, you have to get to above there in order to be profitable. What happens if you triple up your position? Well, this becomes your new profit line right here. Okay, that's where you're profitable. This is a good strategy if and only if you can tell that the market is due for a push upward. I do not recommend doubling up on things that are going to continue to go down. So you need to know if they're going to continue to go down. And this is what I want to teach you. This is the technical analysis that I want to give and provide you with the tools to do your own technical analysis and teach you how the pros do this, because this is how the pros do this. I guarantee you that this is institutional investors coming in here and saying, I really like this price, I'm going to buy it up. I really like this price, I'm going to buy it up. So this is an opportunity, and I really do ask you to soberly and sanely consider this opportunity from a very, 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 very small position size. Why a small position size? Because it could absolutely go down. And how do you double up on a small position size? Well, it's really easy. You just double up. Small position sizes are easy to double up on. But what if you go all in and then it goes down? Well, how do you double up? Doesn't work, right? So this is the strategy. Small position sizes, finding these opportunities day after day, week after week, month after month, and turning them into big opportunities. This is a 10, 20, 30, 40, 50, 60%er, no problem. Okay? And I'm talking about over a couple of days, maybe a week or two, that we can realize that profit, right? Because what we can expect it to do, it's not just going to go like that. That's not real, right? It might shoot up, and then what is it going to do after it shoots up? Well, it might come back down, right? And it might even stay in this channel for a while, right? Well, that's fine. What can we do? If we sold here, we can buy it back here. We can sell it again here. And if we buy it here, and then it comes down, we need to buy more. And we just keep doing this all day long. And we'll be profitable all day long. I'm going to open up the room to questions. If you have any questions, please put them into the chat on the WebEx or in Discord. And yeah, that's it. That's what I wanted to talk to you about tonight, because I really do like this opportunity, and I really do see a really big chance for this to take off. And this is one of those coins that it's in the top 10 market cap. That's the other thing, is talk about coin market cap. When we talk about volume and we talk about profitability long term, we need to know that the market really is going to go up on us long term. Technical analysis can sort of tell us that, but fundamental analysis will always tell us much better. Fundamental analysis means looking at, the reasons why it could go up. One of the reasons why it could go up is this. This is a really good reason for it to go up. And, the reason that this happened is, anybody remember why this happened right here? Is because of a rumor that Vitalik had died, the engineer, and he had to post that he was alive. It's sort of a proof of life here, right? The question is, how do you know where to draw the line? Because you didn't draw it from the true peak. Why did you draw it from the lower peak? This one right here, you're talking about? We absolutely could use this. It doesn't really matter that much. It doesn't change our analysis in any major way, right? What we can see is that this was a false peak. We can see that this was a false trend. Why? Because it didn't really come up and touch this trend, okay? This is a true trend. Why? Because this trend was respected here, 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 and here. So yes, absolutely. Could we use this peak right here? Sure, absolutely. But this isn't a true trend. We can absolutely treat this as a trend, and we can absolutely treat this as, a place that, that we have room to run in this scenario. But really, I think the true trend is here. And the reason that I say that is because this trend was respected here, and here, and here. And if you look very, very carefully, the trend is being respected again, right here. Okay? So I consider this the true trend. It's up to you, whatever you consider the true trend, right? Whatever tells you the most information, whatever gives you the confidence to feel like this really is explaining to you what's really happening. I really do feel like this is explaining to me what's happening, because I can see that this trend line was correlated. If it didn't come here and touch, and if it didn't come here and touch, this trend line wouldn't tell me anything. What this trend line is telling me is that other traders were looking at this trend line, seeing it, and setting their profit targets. Seeing it and setting their profit targets. Seeing it and setting their profit targets from the buys in down here. If I'm buying in right here, where's my profit line? You bet it's on the trend line, right there. How do I know what the trend line is? Because it's been respected over and over and over again. Same with any trend line. Same with any, like this trend line. Was this trend line respected? You bet it was. Right here, we tried to forget about that, right? Right here, we went up to test it. Nope. Right here, went up to test it. Nope. Came back, and then we broke through it. And then on the way back down, this is a respected trend line right here. Okay? Then did we respect it again later? You bet we did. So I look for trend lines that get respected, because trend lines are what other traders are trading off of. This is how other traders are making their decisions. They're looking at these same trend lines and trying to figure out what the pattern is, and they're doing exactly the same technical analysis that you and I are doing. And they're coming to exactly the same conclusions. So you better believe that they're going to sell at exactly the same point, here and here and here, where the trend line meets the resistance line every single time. And that's why I draw the trend line the way I do. Any other questions? Yeah, I do all time frames, right? If I see something on a 90-minute time frame, you bet I'm going to go look at it at a 30-minute time frame, just to be able to see what the real vision here is, right? I'm also going to look at this on a 4-hour timeline, no problem, just to see what the real, true, long-term trend on this is, right? What I want to do is I want to correlate as many signals as I can, because on the 15-minute timeline, you might see something really, really fascinating at a really fine detail level that tells you that, oh, look at this. Maybe we didn't see this before, okay? This is just telling us more information. Here, we came down and we tested support. And we tested support. And we tested support. We tested support and we broke through it. No way, man. Volume spike. Look at that green spike on that volume right there. No way. We do not like this price. This price was rejected. Testing support. Testing support. Ha. Here we go. Back at the trend line. Okay. You don't think traders are selling right now? Of course they're selling right now. Why? Because we're at the trend line. What does that mean? It means it's going to come down. Where is it going to come down to? Right here. Okay? Can it do it again? Maybe. Maybe not. Can it do it again? Maybe. Maybe not. Can it do it again? No. After that, something has to give. Something has to break. Either the news has to change, the market, the long-term trend has to change, something has to change, something has to tell us that we are going back down and we're never coming back up. Because right now, all of our analysis tells us that we are going up because the pressure downward is running out. We've run this downward trend out of steam at this point, right? And meanwhile, the market really likes this price. And I mean, look at how much it hits this price. Bam, it buys it back up. Bam, it buys it back up. Look how heavy it buys it back up right here. Okay? It likes this price so much, it just buys it right back up. Okay? So all of this is accumulation. Okay? So if you bought this whole leg right here, where's your profit line? Well, you bet it's right here. Okay? So if you're this investor, what are you doing? You're sitting. You're waiting. You got 3 days before you're profitable. Why? Because it's going to come down. It's going to do this, and you're profitable. That's how pros work. Okay. So when they get here, do you think they sell the whole thing? No. They sell a tiny fraction of it, and they sell more up here, and then more up here, and then when it comes back down, they buy it back again for cheaper, and then they just do this over and over and over again. Yeah, 10x, absolutely. Pay looks like an inflection point as well. Absolutely. You see these in the market constantly, but it's the ability to spot these that makes you a profitable trader. Because with Gunbot is a gun, and it can make you incredibly deadly. It can make you be able to hunt the wildest and biggest of games. But unless you know what a charging rhino looks like, you're liable to get run over and trampled by it before you can ever make any profit by it, right? And for instance, Legend, I mean, this is exactly what happened with Legend last night. That thing was going up and going up and going up, and man, did it come crashing down. 50%. 50% loss for all the bag holders. Terrible news, right? If you really did believe in that, right, you should have been taking profits. When it was hitting this level and hitting this level and hitting this level and hitting this level, you should have been taking profits left, right, and center, right? Why? Because it's got to come back down. And as soon as it does, you just buy it back for cheaper. If you believe in the long-term longevity of the market, which I do. I believe in the long-term longevity of the market, not just for crypto, not just for Ethereum, but for crypto, for smart contracts. I think that this idea that people are, soccer moms are going to become the new 2, 3, 4, and 5% is valid. I think that we are due for this wealth redistribution, and we are due for a change in the way that we fundamentally operate with our money, with our value. So I hope that was valuable to everybody, and I'm going to wrap it up tonight. But I really do hope to see you in the boiler room, and I'm really excited to make all of you profitable using this strategy, because it is a long-term strategy and it is something that you really do have to invest into. And so I really do invite you at this time to go ahead and write down on paper that you made this trade. Okay? Let's say that we bought in at market rates. Let's say we bought in right here. Okay? Well, where are we going to buy in? Where are we going to double up our position? Well, right here, obviously. As soon as it comes back down and we see volume come up again, because right now volume's on the down. As soon as it comes back down and we see volume come up again, we'll double up our position. Well, what if it goes back down to here? We'll double up our position again. Okay, so this is already on the sheet in the boiler room, and this is one of the trades that we're tracking, and we're going to be profitable on paper first, and then once we're profitable on paper, time after time, day after day, week after week, then you can do this all day long, and you can make yourself a millionaire, and that's it. I really appreciate you guys' time, and I hope that you enjoyed this. Thank you.